You can use something called IBC to move over to the public mainnet at a point in the future when your regulators allow it to.
Like, you guys understand what I'm showing you? I'm literally showing you all physical proof that they're building out the infrastructure in such a way so that way when regulation is in place, they can literally open the freaking floodgates and drag and drop. I mean, wow. What is going on, everybody? Welcome back to another CYPRX video banger. I hope everybody is hanging on, doing okay. The market is slightly down and has been over the past 24 to 48 hours, depending on when you're watching this video breakdown. I want to enlighten you all and show you guys that we were trying to educate individuals here at CYPRX as to when we could possibly see a market downturn and what could cause that market reaction. And I'm going to show you guys that in today's video breakdown. But I also want to give you guys a perspective to really leave off this year and heading into 2025 with optimism in mind. Understanding that short-term price corrections and fluctuations are actually healthy, which we've covered in previous video breakdowns. If you're a CYPRX OG, then glad to have you back. If you're new here and this is your first video breakdown, make sure that you go back and watch some of our previous video breakdowns, because we were one of the only influential communities on the internet actually telling and trying to teach people that there could be a market correction on the horizon. But long-term, zooming out. So short-term, there's some risks that we need to be mindful of, but zooming out long-term, the uptrend still remains intact. And I hope that in today's video breakdown to cover that for you guys and show you all that these financial institutions are coming, and only a very small mirage of financial institutions are actually participating in this space right now. And that is set to change over the next consecutive couple of months / years. So welcome back. Like I said, ladies and gentlemen, if you enjoy these deep dives, these video breakdowns, keeping you guys educated and informed in ways that no other influencers on the internet are doing, showing you guys real updated fundamentals, giving you guys updates when they actually matter, and showing you guys that these financial institutions are telling you all this stuff, do me a favor, smash that thumbs up button and subscribe if you enjoy these videos. It does help the platform grow, and we do appreciate the love and the support. So I'm going to start off by showing you guys that here at CYPRX, this is why it's so important for you guys to be paying attention to this information, because we warned everybody that a correction was on the horizon. And this is not to toot our own horn. Remember, I'm not trying to say, haha, I told you so. I'm trying to show you guys that we're actually providing value here at CYPRX. So there's two posts that I want to orient your attention to. Right down here to the past 2 days, December 17th, the first post that I said to you guys was, the rest of this week will set the tone for the remainder of 2024 heading into 2025. Don't be blinded by greed. Know when the sentiment shifts by knowing what to look for. A pause on rate cuts from the Fed, hawkish Fed comments, right? And I said, these are a few risks that remain, just to name a few. Understand the markets in which you trade and invest, and riding the waves becomes relatively easy. All that's left for you to do is manage risk and avoid over leveraging yourself. Now, I want you guys to pay close attention to the date. This is from 6:13 p.m. December 17th. We'll get to that in just 1 second. And I also posted an entire video breakdown breaking down the Signum report and what to be paying attention to this upcoming week. Obviously, of course, this is from a couple of days ago, and going over this entire crypto market outlook and the risks that remain in the market. Okay. And so if we head over to the charts, this is why, again, it's important to pay attention to the stuff that we put out here at CYPRX, because it's actually informative. We mentioned to you guys on the 17th of December, as you guys can see in this post, this is the tweet right here. There's a setting on TradingView where you can go and you can actually attach people's tweets to the charts to see where they put this information out. We said to you guys, what would skew risk to the downside and what would elevate a risk-off market sentiment is if we saw a pause on rate cuts from the Fed or hawkish Fed commentary. Then the day after, just to show you guys that we're not making this stuff up, when you understand market dynamics, operating in this space becomes relatively simple, and understanding market conditions, risk on, risk off market mood, why the market's actually down. Now, fast forward the day after, look at this, December 18th, the FOMC's hawkish cut slams risk appetite. Boom, right there. And who is this from? Scotiabank. This is from a bank telling you guys this. And we here at CYPRX, we're trying to tell you guys that hawkish Fed comments could skew risk to the downside days in advance. This is again from December 17th. So first off, The reason why I'm showing you guys this is to, again, enlighten you all that there are individuals out there, participants in the space, that actually dive into fundamentals and put this information out to you guys so you can tap in as well. This stuff is market sentiment is not hard to understand. Who do you really see on the internet in the influential space, especially in the XRP community, actually showing you guys bank documents and information that you all can tap into via publicly available information, yet for some odd reason, nobody does. So go check out these videos where I dive into fundamentals. I get that they're kind of boring, but it will truly help you understand the markets in which you're operating in and what creates price fluctuations. We're going to get into a Signum representative today. And if you guys remember, if you're a CYPRX OG, we showed you guys a video breakdown of her mentioning that what has been one of the key drivers of global risk sentiment has been central bank positioning and monetary policy.
Yeah, indeed. And the first point actually that I would like to make on this is that expanding global liquidity has been probably the strongest driver. In fact, I would say clearly the strongest driver of bull markets in recent times. And I don't just mean the crypto market, I mean financial markets in general, and especially since 2008, the financial crisis. Basically, asset prices are increasingly shaped by what previously would have been termed unconventional central bank policies that basically directly affect liquidity conditions. And these have actually increasingly become the dominant force in moving asset prices.
And so if that sentiment changes hands from the current environment, which was risk on due to increased rate cut bets, if that sentiment is weighed upon via comments or central bank positioning, then that tends to weigh on risk sentiment. It's very simple metrics to understand. So that's how we were able to call this most recent market pullback. Now, short term, like I mentioned, there's some risks, especially to inflationary pressures. There's some risks surrounding President Trump's tariffs when he comes into office in early January. And there's a lot of other factors like geopolitical risks and things of that nature that remain short term. But long term, zooming out, in my personal opinion, if you're a long term hodler, all of that stuff, if you can deal with the market volatilities, is absolutely irrelevant. And in my personal opinion, again, this is according to my personal portfolio, when there's blood in the streets, this is when I'm buying. The reason why is because the long-term trajectory of this digital asset ecosystem is still supportive of massive upside potential. So what we're going to do is we're going to take a second and we're going to listen to some video clips. And I'm going to, again, all these perspectives are from individual participants in this space with many more credentials than I myself. So the first video that we're going to listen to is from this individual representative here. She's the Signum head of investment research. Listen to what she says about how we are early and how banks have barely allocated any money to the digital asset space. Take a second here and listen.
We are only actually seeing, you mentioned, we have seen quite strong institutional inflows already this year, but we are only seeing the beginnings of this. It is the very first traditional financial institutions that are starting to make percentage allocations to crypto. We are very early in this trend. And
I'll pause it right there. I don't want to elongate what she says because she does go on and go a little bit more into detail on how when institutions do actually flood into this space, it could cause demand shocks. However, the thing I want to orient your attention more so towards is that this is coming from a institution like Signum, head of investment research, telling you all that we are early. She's not some retail participant on Twitter saying, hey, we're early, we're early. I know that people get tired of hearing that, but she is confirming that financial institutions have a very small amount of capital allocated to the digital asset space. When we see 1 to 2% of capital from these financial institutions allocated to crypto, it's going to be absolutely monumental. So we have to understand, again, short-term perspective, like I showed you guys, can be pessimistic. Downturns are, understandable. Market corrections are healthy. Long term, the uptrend still remains intact. So now let's move on to where she talks about how after regulation, and this is going to play an important role because we're going to get into some other market participants, how after regulation comes into play, that is when she sees massive amounts of inflows from financial institutions into the digital asset space. Take a second here and just listen to what she says.
And also at this moment, hopes are high for regulatory clarity. That's very positive for crypto. Also, that in a best case scenario, regulation will be highly appropriate for the asset class, that it would be tailored such that actually it would allow projects to create token structures that pass real economic value to token holders. So the hopes are there. The delivery seems to be fully on track. but it's not yet fact. So when these hopes are realized, I think, first of all, there is more upside, and because it removes further uncertainty. But secondly, some new money is definitely waiting for example, regulatory clarity to be actual regulatory clarity, not just strong expectations of it. So I think there is more of it to come. Obviously, there's
Boom, right? She literally just confirmed that there is massive amounts of money that is waiting for regulatory clarity in this space that will come to crypto once it goes from hope to a reality, and that is potentially coming in 2025. So yet another reason why it's important to be long-term optimistic, knowing, again, having this perspective that once regulatory clarity is implemented into the space, who really truly knows how much money is going to come flooding in? But we do know one thing for a fact, is that that money is coming, and it's only a matter of time. It's not a matter of if anymore, it is a matter of when.
Here at CYPRX, which have been very exciting, have been very focused on us actually delivering solutions into production within the financial services industry. So it's been a great 4 days. We're all exhausted, but it's very exciting. And as I say, it's really, really about the when, not the if. I have not had anybody come to the stand and ask me the questions about blockchain and tokenization and does it work or is it applicable? All of that has gone. We've moved on. It really feels like we've moved on, and we're in the next chapter of our journey, basically, which is really exciting.
Right? We have moved past that if environment. We know the capital is coming, but we need to see regulatory clarity, and that will broaden in 2025. Now, considering what she just said, do you guys remember a video clip of an individual representative named Paul Brody from EY? He is the global blockchain leader at EY. You guys remember what he said just a couple of months ago about the great liquidity reservoir lifting once regulatory clarity is firmly implemented? And this just kind of coexists with what she just said in a recently updated video breakdown. Take a second here and listen.
This part of the conversation is called the Great Liquidity Reservoir, and I am going to struggle to convey just how much capital there is behind this regulatory dam, because the numbers are just monumental, right? How much money is there? Well, let's start with the most liquid of the liquid, right? Bank deposits, stocks, and bonds. $400 trillion. Right? Certainly more than my current retirement nest egg, and plenty of money to buy you a nice place in central London or San Francisco, right? 400 trillion. There's another 379 trillion in real estate, right? Gold is 13 trillion by itself. And then you get to the entire crypto ecosystem is like 2.5 trillion, right? I'm not going to say all of this money is going into crypto, but quite a lot of it will end up in crypto.
And he pretty much just word for word solidified what the individual from Signum just said, that once this regulatory wall is lifted, the massive amounts of liquidity are going to flow into this digital asset space. Now, again, he didn't give it any kind of crazy hopium and hype and say all this money is coming, but a very large portion of it is going to come to crypto and digital assets. So we need to, again, understand that short term, we could experience some price fluctuations and we could experience some volatility to the downside. That is 110% understandable. We have to understand that that's part of the market. But long-term, zooming out, the uptrend still remains intact, and that is the important part. As a market participant, having a long-term perspective and understanding where this space is headed. Moving on, we have another video breakdown. This is going to be monumental because this is going to full circle, especially if you're a CYPRX OG. Does anybody remember? We'll get to this in just 1 second. This individual representative mentioning, and I played this video clip for you guys over a year ago, and I've been utilizing it consecutively because I've been paying attention to these types of developments. This is an individual from JP Morgan. Listen to what he says. Does anybody remember? This is remarkable because he literally said that they're building out the infrastructure in such a way to literally drag and drop over onto public chains once the regulatory environment allows for it.
We did a project last year with the Monetary Authority of Singapore where we demonstrated what it would actually look like for a regulated institution like ourselves to utilize public DeFi protocols, to utilize public blockchains. And very clearly, there were lots of very insightful learnings for us. The transparency that you get around DeFi pools, for example, the ability to have anytime price discovery through a DeFi protocol, very, very important and interesting. Also, the lower cost. As I said, until we actually have some clarity around the ability to actually operate on this infrastructure from a reg perspective, we're going to have to be in this sort of permission view until we can take some of the hybrid steps. And those hybrid steps look like some of the existing infrastructure that is coming out right now around, subnets or permission zones or these kinds of things. And from our perspective, the reason why we operate an EVM sidechain is so that everything that we build can actually be portable into a public environment. So all of our contracts are written in Solidity. We use ERC20s for the most part for our tokens. All of our developer tooling is, utilizes the public Ethereum ecosystems tooling set. So actually moving into the public blockchain environment when we can will be much of a sort of a lift and drop scenario.
Boom, right? Okay, you guys remember I played this video clip. So now let's fast forward to today. Okay, more recent times. This was just posted from EY News. This is Paul Brody talking about and explaining how much enterprises can save by switching from a banking rail to a crypto rail and why that could open up the door for a flood of B2B payment transactions. Let's think logically for a second what I showed you guys. So this is, again, an updated video. Look at the dates. Dates are always important to me. And if you've been here at CYPRX with us, you know dates are extremely important. This has 94 views. This was streamed 13 hours ago. This is a Signum representative talking about how institutions are coming. Only a small percentage of them are here. And once regulatory clarity is in place, more institutions are coming in capital that is sidelined right now because of lack of regulatory clarity will flood in, right? Well, Paul Brody was saying this freaking months ago, 7 months ago, right? He talked about this great liquidity reservoir. He talked about once regulatory clarity is in place, massive amounts of money are coming flooding in to crypto. And now backtrack to this individual representative from JP Morgan mentioning a lift and drop scenario, being able to lift the infrastructure that they're building now and drop it on the public blockchains once the regulatory clarity comes into play. Now let's go to Paul Brody. This is, you cannot make this stuff up. This shows that they are literally in bed with each other, people. These organizations, they're the ones having meetings behind the scenes, and they are publicly projecting this info to us, okay? I know that we've gone on for 19 minutes now, but just listen, watch. This is crazy, okay? Listen to what Paul Brody says, and then I'm going to play a panel discussion. Let's go over here to full circle. I'm going to play both of these back to back because they talk about building out the infrastructure right now to operate on public blockchains. This is a panel discussion of a JP Morgan representative and an individual representative from Social General, Prove Labs. So these are large market participants, and listen to what they're freaking saying. I'm going to play both these videos back to back. First, Paul Brody.
US dollar payment from PayPal. It was executed inside their enterprise computing system. They said, pay this EY invoice because we were doing some work for PayPal. And that automatically paid from PayPal's wallet directly to EY's institutional account at Coinbase, facilitated by their enterprise ERP system. That kind of automation means that banks can, or enterprises can very easily switch their payments from, say, a banking rail to a crypto rail without any incremental cost. And this clears the path for what I think is going to be a flood of B2B payment transitions.
He literally just confirmed that it's very possible. Okay. I mean, it's monumental what is happening that people don't see. Okay. Now, check this out. This is a recent panel discussion. This was only uploaded 4 weeks ago. Okay. This is a panel discussion from Burial Elite's public versus private blockchains. Listen to what this individual representative says here.
Banks are actually looking at, and asset managers. Asset managers have done public chains, but that's different. We'll get into purposes later. But the banks are actually, from what I hear, really looking at public chains because the future, I believe, is public. And I believe that they're similar to the intranet and the internet. So remember when companies were afraid of the internet, we all had intranets in our computers, and that didn't really, it was like a bulletin board, right? Versus the internet is free access to information. So I think that this is really access to finances, securities, what have you. So that's how I view the two worlds.
And maybe Anthony continues this discussion. So with the definition of blockchain, I'm a neophyte in this to some degree, public-private, but also I saw a hybrid and consortium. They sound like they're derivatives of public and private. Is that a correct understanding?
Yeah, I think you would put decentralized and public on one extreme and then private and permissioned on the other, and there's iterations of each. With JP Morgan and Wisdom Tree and Avalanche and some others, last year, we worked on something called Project Guardian, which was a private and permissioned instance of the public blockchain of Provenance. So that was a bit of a hybrid. And the beauty of working on something like that is JP Morgan ran their own nodes, meaning they controlled the network. They didn't worry about a distributed network. They actually controlled their own network, which means they controlled the tokenization, which means they controlled the fees and permissioning. So it was essentially as locked down as a centralized database. But the beauty of building in Provenance, for instance, is you can, with a touch of a button, you can use something called IBC to move over to the public mainnet at a point in the future when your regulators allow it to. So it really is the best of both, and we call that a hybrid, if you will. You can use something called IBC to move over to the public mainnet at a point in the future when your regulators allow it to.
You can move over in the future when the regulators allow you to. So you guys understand what I'm showing you? I'm literally showing you all physical proof that they're building out the infrastructure in such a way so that way when regulation is in place, they can literally open the freaking floodgates and drag and drop. I mean, wow. So with that all in mind, understand that the short-term perspective, we could definitely see some price fluctuations. We have to be willing as market participants to deal with those. Those short-term price fluctuations can be painful, especially during market downturns. Have a strategy, join a community of like-minded individuals so that way you actually are getting good information, right? Understanding why market volume and volatility is happening to the up or downside. So that way you're not misled and you actually understand current market conditions. I cannot stress enough. That's short term. And then also understand and incorporate longevity in this space by understanding the long-term perspective that they are building. And when I mean they, we just confirmed banks are interested in public blockchains and that trillions of dollars after regulatory clarity is coming to fruition is coming to this space. Understand that as well, okay? Because this is the opportunity of a lifetime. I mean, we're never going to get another opportunity like this ever. And so it's time to capitalize on understanding these markets, understanding the perspectives of these large market participants, and not just treating this market with immaturity and coming here and thinking that we're going to survive just by downloading an application on our phone and dollar cost averaging in. We need strategy. We need awareness. We need to understand. We need to be reading these documents. And again, this is all my personal opinion, but that is how you survive long term. Not paying attention to the bullish moon boy hopium and hype that's always just constantly fixated on pumping everybody's dopamine. To survive in these markets long term, it is going to take strategy. It's going to take situational awareness, and it's going to take an understanding, a firm understanding of the markets in which you operate in. So many blessings to you guys. Hopefully we facilitated that understanding to you. We talked about some reasons why the market could experience a slight downturn in the short term. That now has come into fruition. Let's see how things unfold moving forward as we need to remain data dependent heading into 2025. But I hope that this video breakdown enlightened you all on the zoomed out perspective that the uptrend is still intact after some possible short-term price corrections. Be cognizant out there, be safe. Always make sure you're doing your own personal research. If you enjoyed this video breakdown, smash that thumbs up button and subscribe. We do appreciate the love and the support. And with that being said, I'll see you guys in the next video breakdown.